Good morning, hello and welcome. You're watching us here on CNBC-TV18. I'm Manglam Malu. This is Power Breakfast, the show where you prep up yourself for the trading day ahead. And as we do that, let's start with the Asian markets this morning. The Asian screen is rather green, and that's primarily on account of news coming in from the US Fed minutes overnight, which indicate that there could be a slowing down of the pace of interest rate hikes. And the street perhaps believes that maybe now from here on, it would be 50 basis points as against the 75 basis points that the Fed has been hiking interest rates by. As a result of which, 1% in terms of gains coming in for the Hang Seng, 0.5% for the Taiwanese index. What does that mean for the SGX Nifty? Well, we've been in a bit of a range, but turns out that maybe at the open, we will see the upper end of the range, an 86-point bump up. Remember, today the US markets are shut primarily on account of Thanksgiving holiday. Tomorrow, too, is a truncated session, but we do have the expiry, the November series expiry. So in light of all those cues, will be extremely important to track the markets. But let's talk about what took place on Wall Street yesterday. It ended a choppy trading session, largely higher, almost 1/3% gain seen on Dow Jones, 1% seen on NASDAQ, led higher by something like a Tesla, etc. And that's primarily on account of a couple of brokerage notes. And largely, it was on account of the comments coming in from the minutes of the Fed meeting. Let's talk about that itself. Federal Reserve officials now favor slowing the pace of rate hikes in the near term. According to minutes released from the central bank's November policy meeting, some officials also expressed concern over the impact of rate increases on financial stability and the economy itself. So let's hear out from CNBC's Steve Leisman, who gets us a wrap of all the highlights.
After a meeting in which the Fed had hiked 75 basis points for the fourth straight time, the minutes showed agreement by officials to then slow the pace of rate hikes in the future. The minutes to that November meeting said, quote, a substantial majority of participants judged that a slowing in the pace of increase would soon be appropriate. Most people believe that means a 50 basis point rate hike coming in December. At the same time, the Fed looked to have some disagreement about how much further to go. The minutes said some officials were more concerned about the cumulative impact of rate hikes on the economy, while others suggested the Fed may have yet more work to do than previously expected because of higher than expected inflation. Here's market pricing right now for rate hikes. Here's what it looks like. An 81% probability of a 50 basis point hike in December, 70% for 50 in February, and 51%, in other words, that March 25 basis point hike, that's kind of on the cusp right there, with 49% thinking there will be no hike. So an additional 100 to call it 125 basis points of tightening still to come, still priced in. The minutes, importantly, came before the recent inflation report. That came in lower than expectations. But they precede the stuff we got in the last week, retail sales and business spending data that have prompted upgrades to the growth outlook and suggested some more work ahead for the Fed to cool the economy.
All right. On that note, let's also hear out some important opinion coming in from former Kansas City Fed President Thomas Hoenig and Brian Jacobson of Allspring Global Investments.
They're going to slow it. It'll be 50 basis point in December, subject to any surprises. And I think, given that they're looking at maybe the potential real GDP growth being around 2.5%. If they get rates up to 5%, they'll want to, that'll be kind of the target. If inflation comes in higher, they'll move it higher than 5%. And that's where a lot of the discussion in December will focus on, where it should be the end rate. And I think they're talking right now, at least in their public statements, that 5.25% is the number, and I think that's probably the number they will be. And then once they get there, and I suspect it'll be before June, but once it gets there, then the discussion will turn to how long you leave it. And that's a big issue in terms of making sure you get inflation numbers down towards the 2% for it to stay there. And that will be a big discussion item in the FOMC.
The experience would suggest to us that they have oftentimes had to reverse course because they are a little late to the game. They were late to the game in terms of hiking. They'll probably be a little bit late to the game in terms of when it's appropriate to cut. And the market, if you look at what they've done in the past, really it was only the 2004 to 2006 experience that they were able to hike and hold for a while. I can understand why the market might be pricing in that they need to reverse course. The Fed might be a little bit stubborn when it comes to actually when they get to, say, 4.5 4.5 to 4.75. And that's actually why maybe instead of trying to go fast, high, and hold it for long, they might want to go a little bit slower, go a little bit shorter as far as how high they need to go, and actually begin to hold it at that level for maybe, let's say, until the end of December.
All right, so that's about all the update coming in from the US Fed and minutes of the same, what the investors made of them, what the experts made of them. But let's get you our final update of the global market wrap this morning. Modest gains seen in the European markets on Wednesday, with the French CAC mildly higher by about 20 odd points. The German DAX was absolutely flat. The British FTSE closed about 12 points higher. Credit Suisse was under pressure after the company projected a 1.5 billion Swiss franc fourth quarter loss as it undertook a massive strategic overhaul. Remember, they had announced a raft of measures last month to address the company's underperformance and a series of other risks and compliance failures. Shareholders of the Zurich-based lender also approved a 4 billion Swiss franc capital raise in an extraordinary general meeting aimed at financing the company's overhaul. So that's about the US markets, the European markets, the Asian screen this morning, the commodities, as well as the US macros. That's all the global market action. But how will those cues impact us here in the Indian markets? We do have our research team joining in with what the trade setup looks like. We have Ekta, Vahishta, as well as Nigel. Good morning, guys. Let's go to Ekta first. Ekta, it is November series expiry today. We have a lot of global cues. What are your thoughts?
Well, yes, Mangalam, thanks very much for that, and morning to you as well as the entire team. Well, the Sensex and the Nifty did fall from highs in the last hour to close flat in yesterday's trading session. But like you mentioned, the big Q is definitely going to be the November expiry today. But talking about what the markets are probably going to work with in terms of global cues, we have the US Fed minutes where the officials see slowing rate hikes soon. So that's definitely a positive. The initial jobless claims in the week ended November, also November 19th in the US, also rose on a week-on-week basis. So maybe the street will probably perceive that as maybe an economic indicator saying that the rate hikes is working. Asia is largely higher at this point in time, and so is the SGX. The other big positive for us is that Brent crude has slid further, so it slipped below $85 per barrel on Russian price cap talks. Now, there is that Thanksgiving holiday in the US, so we expect lower participation in today's trading session as well as possibly tomorrow's trading session. But overall, for our markets, I would watch for the momentum in the financials continuing, considering that the Nifty Bank posted a record close. PSU banks are continuing to see a lot of momentum. And just watch out for what the institutions are doing, because they've net sold this week to the tune of over $750.
Right. Seems like a bit of an audio issue with Ekta out there, but we get the gist of what she's trying to say. The November series expiry will be extremely crucial. Also, we'll be watching out for the reaction coming into the US Fed minutes, because global markets are by and large taking it positively. But in terms of individual stocks, let's go across to Vahishta. Vahishta, what are the stocks on your radar this morning?
Hi, Mangalam. Let me start with Biocon. Has issued a commercial papers of 2,250 crore rupees. Moving on, Fusion Microfinance. They'll be having a board meeting on the 28th of November to raise 145 crores via the NCD route. SBI Cards has seen the resignation of their chief risk officer, and the last working day will be towards the mid of February 2023. HG Infra Engineering has received a letter from Adani Road Transport for one of the projects in Uttar Pradesh, and this is to execute the civil and associated works on an EPC basis for the development of a road project under the public-private partnership basis. Canfin Homes will also be having a board meeting on the 28th of November to consider a proposal for payment of interim dividend for FY23. And the last is Keystone Realtors, which will be having their market debut today.
All right. Thanks a lot for that. And Nigel, it is November series expiry. FIIs continue to write a lot of calls.
Well, that's right, Mangalam. That's going to put a bit of a fight at higher levels. But in terms of the action and the cues that we got, well, the institutions were mild net sellers in trade yesterday. The longs continue to get added. So on the index futures itself, the ratio was close to around 3:2 odd in terms of the number of longs that were added versus the shorts, and they continue to remain net long on the index. And I tell you what, some part of the street or the bullish sentiment will be missing out some shorts in the system. Otherwise, I'm guessing we could have easily been above that 18,400 odd mark. Now, they are buying both calls as well as puts. For yesterday, they bought more calls than puts. But the problem is they are writing calls very, very aggressively. Even yesterday, they wrote closer around 42,000 call contracts, or telling you at higher levels, we're likely to see some bit of resistance. And take a look at a couple of strikes, 18,300, 18,350. Between both these two, the total open interest is 2 crore, because 18,300 is around 1.4, and you put the 61 lakhs in there as well. So that's closer on 2 crores. So telling you that the bears, they want to defend that level, and we're likely to start off closer to that level. So it's going to be very interesting, because the range we have, close to around 18,200 to around 18,400. And I say this because a short straddle could be in the works at around 18,300. That's you pocket 100 rupees premium and you play for a range on either which side. So that's the broad range that we're seeing. On the downside, though, support, because we saw some writing at around 18,300 put. I'm thinking that around 18,230, 18,240, that's a bit of a support zone. We're going to be starting off closer to around resistance. So that's going to be very, very important. The trade for the last few days is don't chase the opening. And I think that's likely to play out yet again. Look to buy the dip and hope that we can get past that 18,350 hump pod. SGX Nifty suggesting we're going to be off the blocks in style. Back to you.
All right, Nigel, thanks a lot for that. In fact, on that note, we'll thank Ekta, Vahishta as well as Nigel for setting us up for trade this morning. And with that, we'll take our first short break on the show. Come back on the other side. We'll get you the big takeaways from the industry leaders speaking at the SBI Banking and Economics Conclave. Watching us here on Power Breakfast, and the morning is looking powerful with the SGX Nifty up 85 odd points. Let's talk about what top industry leaders have to say about private investment picking up. In fact, they spoke at the 9th Banking Conclave of the SBI. We had Chairman Dinesh Khara saying that 20 lakh crore rupees were invested last year and 12 lakh crore rupees has been invested this year so far. And that's not all. Khara also said that banks are sitting on excess liquidity worth nearly 3 lakh crore rupees to meet demand. We spoke with the L&T and the JSW Steel top brass as well. They too remain upbeat on growth as well. Let's get you a slice of that exclusive conversation.
We are already seeing a fairly good pipeline of the proposals. It is, I can probably share the number with all of you here. It is as strong as about 2.5 trillion with State Bank of India itself. And also, let me share with you, last year we had seen almost about the proposals, in fact, the fresh investment coming in about 20 trillion. This year it is already about 12 trillion. So that is a very clear reflection that people have faith in the demand in the economy. I think that is something which is most important. And I would say that if at all there is a demand in the economy, perhaps the corporates are willing to invest. Corporates are willing to come with the infrastructure and also the capacity creation too. And the second important component is the capacity utilization has improved to about 75%.
The government's thrust on infrastructure, building and investment is music to our ears. As a representative of a company which thrives on infrastructure building out, we think that we are in for a period where investment in the core infrastructure, be it transportation, healthcare, be it in terms of public spaces, utilities, water, power. I think India is so underserviced as an economy, and it is at the other end of its aspiration that unless we provide a bridge between the aspiration and the enablers, India is not going to get its targets right. And I think the government does realize. So consequently, I think a lot of focus was getting the act together, getting the house in order. I think now that largely that has been achieved, maybe the minister, finance minister, could possibly see demonstration of the optimism coming through in plans.
So to answer your second question, PLI, production linked incentive for specialty steel, it is not creating a basic steel capacity. So whatever imports we are doing of specialty steel, like electrical steel, which we are importing 100% into India. Similarly, something related to API grade steel or automotive steel, where we are importing, PLI scheme is getting extended only to the specialty steel. That means basic steel making already exists in India. Right. We need to go into high-end value-added steel. For that, PLI scheme is introduced. 79 applications have gone itself, is showing that there is a lot of interest in setting up those capacities in India to stop the imports and also to enable Indian steel industry to export, as far as that particular point is concerned. Second one, you...
On the concessional tax rate being extended by another 5 years.
So in fact, this concession of 15% was given in the year 2019. Yeah. And they said by 2023, whatever investments that are made, those investments should be completed and it should be commissioned. Whereas at the request of the industry, it has been extended by 1 more year.
Correct.
But because of this offshoring and also China plus one policy, if it is extended, it will be great. It is welcome step.
My assessment is that almost about 2.5 trillion to 3 trillion is a balance of the government with the banks, RBI. So that remains unspent. During the month of November, we did see some kind of a spending happening from the government, and it did ease out some of the liquidity constraints. Going forward, I think the banks have got the excess SLR, and that excess SLR will be utilized for ensuring that there is no liquidity challenge for meeting out the growth needs of the economy. To my mind, the way inflation is now trending lower in US economy, that will lead to a situation where perhaps the Fed may not be increasing the interest rate as much.
Mr. Khara, you said that you hope or believe that the Fed may slow down the pace of hikes given the fact that inflation has started to ease a little bit in the US. What's the expectation given where we currently find ourselves on the rate trajectory? And we've got the MPC coming up as well in the first week of December. What's your expectation on that?
Well, I think when it comes to the central bankers, probably Fed is supposed to be the bellwether. So let us wait and watch what the FOMC decides.
Welcome back. The big talking point overnight was the volatility that we saw in crude prices, but good for India, $85 for Brent crude. And with that, we'll hand it over to Manisha, who joins in with all the updates coming in from the commodity space. Manisha.
Thank you so much for that, Mangalam. Well, yes, 4% of a decline yet again in the overnight markets, but the crude oil prices seem to be now trading within that 3 to 5% of a move on a daily basis for many sessions now. But with the last night's decline, we are now at a 9-month lows for the crude oil prices. We have been dealing with the weak global demand outlook, but the latest trigger clearly comes in from the G7, where the expectation is that the price cap that they're looking at in sense of Russia could come in at $65 to $70 per barrel, and this also would be adjusted periodically. This is much higher than what the street was anticipating. I mean, with these kind of a price cap, it doesn't really hurt Russia as much, and they would want to continue to deliver to the global market. So the earlier concerns that Russia could cut supplies and there could be a tightness in the market now seems to be getting off. That premium is off the markets, and is the reason a lot of long positions perhaps are being closed right now. What also is going on to the markets is that you did see the U.S. gasoline stocks rise. So either it is more refinery on the stock or there is less demand on ground. And then OECD also said that they're anticipating deceleration in global economic expansion. So everywhere that you look, the market thought that there is lesser demand going forward now for crude prices. In any case, OPEC and IEA have cut the global demand growth for this year and the next as well, and that continues to be onto the crude oil prices. So when you look at the last 1 month itself, we are down by nearly 13% for the crude oil prices already.
Take that point, Manisha. Thanks a lot for that. Crude prices down, good for India, the Indian macros as well. But let's also get you the latest on the surge that we've seen in COVID-19 cases in China, where authorities have actually stepped up curbs, which were already tight after daily cases rose to over 29,700. That's the highest ever tally since the pandemic's outbreak. Meanwhile, there have been protests at the large iPhone factory in China. Visuals and images on social media do show hundreds of workers at the Foxconn plant clashing with riot police and people in hazmat suits. And let's get you some news coming in from the Football World Cup. We have the second upset. It's turning out to be a World Cup of upsets so far in the early days. In as many days, 2 upsets in 2 days. Japan has gotten the better of the tournament favourites. Germany this time around. The Germans ended the first half leading by 1-0, but a series of inspired substitution changed the theme for Japan, who eventually won by a margin of 2-1, most done in the second half itself. The second half of the second half itself. In other matches, we had Croatia drawing with Morocco and Belgium in a very tight game. Got past Canada by a margin of 1-0. Right, with that, we wrap up on this edition of Power Breakfast. You stay tuned to CNBC TV18. Bazaar Morning Call comes up next.